It will be so nice when the Fed finally starts lowering the interest rates. Wow! It will be a huge party. It will be a huge rally. We will have so much fun. Bitcoin will rally to the moon the moment the Fed decides. The moment the Fed decides to lower the interest rates, this year is going to happen. This year. Look. This year it will just go straight up in a straight line like this, without any correction. Straight to over $1 million. Straight to $1 million the moment the Fed decides to lower the interest rates. Or, friends of cryptocurrencies, that is at least the narrative that we keep hearing from time to time, right? We keep hearing from time to time that it will be amazing when the Fed finally lowers the interest rates. It will be very good for the crypto market. But is this actually true? Is it actually true that if the Fed would start lowering the interest rates, what the fuck just happened? My keyboard, my keyboard battery just died right now, because why not? Why not should it die while I record a video, right? I mean, that would be strange. So, what happens if the Fed, would decide to lower the interest rates? Let us try to understand. And for that purpose, I will load the famous interest rate curve of the Fed. Okay, you see it here in orange. Orange, what the hell is orange? In orange. And this is the weekly chart, by the way. So 1 bar is 1 week. On the x-axis, the time. And here you see the y-axis. It is always in logarithmic mode, friends. Crypto, Bitcoin, it doesn't make sense in linear mode. We always use the logarithmic mode because you cannot see the details what happened here if you use the linear scale. So the only hike cycle, okay, Bitcoin was traded since 2010. And the only hiking cycle of the Fed that Bitcoin has ever seen was here, the hiking cycle from let's say late 2015 to about early 2019. Okay, that is the only hiking cycle that Bitcoin has ever witnessed. And so the funny thing is that Bitcoin performed actually super nicely when the Fed started raising the interest rates here. Bitcoin immediately started going on a rampage. It went on a freaking rampage. Here, look at this. And then when the Fed said, okay, guys, I think we're done with the rate hiking cycle. Let's make a pause. Okay, let us make a pause. That is when Bitcoin went into a frenzy. Okay, because we had the bear market here. So because Bitcoin rose so much here in those 2 years, in 2016 to late 2017, it reached a crazy breaking point here at $20,000. Then it started going into a bear market. And the moment the Fed said, hey guys, we will pause the interest rate hikes, right? Then immediately Bitcoin went on a rampage. Okay? So it appears that the time when the Fed is actually pausing rate hikes is good for crypto. Now, when the Fed started lowering the interest rates, going down again, that was actually not good for the crypto market. We are surprised to see that. Look what happened, friends. What happened here? This was not good for the market. Let us zoom in. I mean, this went from 14,000 all the way down to okay, you might say it was an anomaly because of the COVID stuff, but nonetheless, from 14,000 down to 4,000, 3,900. That is a brutal crash, okay? So we might say that it is good for crypto when the Fed pauses, when the Fed does not increase the rates anymore, but it might not be so good for the market, friends. It might not be so good if the Fed actually starts lowering. Then you might say, the critics among you will say, but hey, you are exaggerating. You ass. Why are you so stupid? You idiot, they will say. And to that I say, that is actually kind of correct. That is only one data point. However, we also know that Bitcoin is very much positively correlated to the stock market, right? We wish it was not so, but let us load the S&P 500 just for fun. Just for fun, let's load it and compare it to Bitcoin. And then we can see like hey, wow, there's a strange similarity, a similarity that we wouldn't like so much, right? Because many times, not every time, but many times when the S&P 500 here in orange made a top, let's draw a vertical line, you can see that at least the S&P had some kind of local top, right? At least some kind of local top. Let's just make a vertical line every time when Bitcoin peaked. And we can see very clearly in a very fast and easy manner that, hey, wow, there is a brutal correlation. I mean, look at this. Here it's undeniable. You can even see the bear market is overlapping here. Here, okay, here not so much in 2013. Bitcoin went on a rampage. Why? Because, friends, here in late 2012, there was the first ever Bitcoin halving. And also, like, those were the crazy days with Mt. Gox, and there was some manipulation going on Mt. Gox. And this led to this huge rampage here. So we cannot compare this so much. However, we should certainly note that this occurred at the same time when the S&P 500 was also rising, okay? So if the S&P 500 would have not risen, big price question, would Bitcoin have risen? I think not. Also, look at these two peaks here. That is fascinating. We have these two interesting peaks here, and we even have these two peaks in the S&P 500. Crazy. So then afterwards, this peak here almost coincided with the Bitcoin peak. Not quite, but almost, right? That is absolutely fascinating. And here, this peak here coincided with this one here with this one. Then the anomaly, of course, coincided here. This bear market coincided with this here. This top here coincided with this local top. And this big top actually almost perfectly coincided. I mean, really almost perfectly coincided with the famous top in November 2021. I mean, like, this is too much to just be a coincidence. We have a very strong positive correlation between Bitcoin and the stock market, okay? That is pretty clear. Now you will rightfully say, Sebastian, you stupid idiot. Why are you telling this to us? What does it have to do with coins? Well, now we have established that Bitcoin is correlated to the stock market, and it's probably not so good for crypto when the Fed funds rate is dropping. So when the Fed lowers the interest rate, and we can look at the CME watch tool. The CME watch tool says we will have maybe one more rate hike now in June at the upcoming FOMC meeting on the 14th of June, right? And then afterwards, you can see it will stay the same. It will stay the same. The market expects it to stay the same. And then at some point in early 2024, it is starting to go down. It will go down, right? At some point then here, if you go even further forward in July 2024, the market expects us to be 100 basis points lower again, okay? So at some point, the Fed will start going down again. So that is, of course, very important information. So if we now load the S&P 500, this is the S&P 500 in logarithmic y-axis, and we can see it has actually a nice steady increase over many years, right? It's like steadily rising, which of course makes sense because the purchasing power of money is also dropping and the economy is also growing. You know, we build new products, new companies emerge, they create new things that did not exist before. So it kind of makes sense that this thing keeps on rising. Let's just overlay the Fed funds rate, right? Was it good when the Fed raised before, so in the previous rate hiking cycles? And then was it good when the Fed suddenly started lowering the interest rates? Was this good for the market, or was this maybe not quite so good for the market? So here we have one instance. I will just draw vertical lines. Okay, we have this instance here in the late 60s, where here we had this pause, and it already started going down before, but as the Fed then really started lowering the interest rates, bam, the market brutally crashed here. We can see like it went really down aggressively. And here we can also say, okay, rate hiking cycle. And then as soon as the Fed started to somewhat not hike anymore, but to keep it steady and then to go down afterwards, we can see that this is when the market turmoil really erupted, right? Okay, so what happened here in the famous 80s, early 80s hiking cycle? Was it good when the Fed said here, hey, let's just brutally go down with the rates? Was it good for the market? This does not look so good. This does not look so good, right? And what about here? Yeah, in the late 80s, right? In the late 80s. So we had a hiking cycle which was pretty relaxed. It was a relaxed hiking cycle. I mean, we went from 6.5 to 9.5. I mean, this is like 300 basis points. This is super chilled. So I don't know if we can really take this hiking cycle into account. But nonetheless, the moment the Fed decided to really go down, I mean, it started to go down a bit slightly here already in March 89. And then in October 1990, the Fed really started going down brutally. And what happened? This is actually when we reached the market low. So, okay, this is an instance when actually it was not so bad that the Fed actually started lowering the interest rates. This is this one time in 1990. My theory is because MC Hammer still lived and there was good music on the radio, so everyone was like in party mode and like, yeah, MC Hammer, you turn on the radio, MC Hammer is in the radio. I mean those were golden times. So it's clear that the market is not dumping in those wonderful times. But now we live, unfortunately, in different times. And here, most famously, of course, in 2000, right? In 2000, so when the Fed here stopped raising the interest rates, what happened, friends? We can see that here, actually, the market topped. And as soon as the Fed went down here, lowered the interest rates, bam, complete market crash. Like, wow, complete market crash, okay? Complete crash. Then, the famous one, of course, the big one, right? From 2006, right? We raised here quite aggressively from 1% to 5.28% in the course of 2 years, okay? And then the Fed stopped. And when the Fed stopped, this was excellent for the market. There was a huge rally, right? There was a huge rally. But when the Fed actually started lowering the interest rates, this was not good for the market, okay? So we can see, quite surprisingly, that most times, here also, that is, of course, the famous one where Bitcoin already existed, we see that when the Fed stopped hiking, that was good for the market. We got a nice rally. And then we went down, and then, okay, the market still continued for a while, but then, bam, we had this huge crash. And friends, this is not only due to the COVID anomaly, because the bond market actually predicted this. If we look at the bond market, it actually did predict that there was a weakness in the market and that there was a high likelihood for an economic downturn. So we see that there's only one time in history, when MC Hammer was on the radio, that basically the Fed lowered the interest rates and the market said amazing and started rallying. One time. But most other times, like we can count it actually, like late 60s, early to mid 70s, early 80s, early 2000s, late 2000s, and in 2018, 2019. All these times, every time that the Fed lowered the interest rates, this was not good for the market. So my prediction is now, going back to Bitcoin. Let's remove all these drawings, right? Let's load again the Bitcoin chart, right? Bitcoin. Let's load the Bitcoin index, right? Together with the Fed funds rate. So coming back to the interest rates, loading the interest rates again. So what can we expect now? Maybe one more for June, something like this, right? And maybe the last one in July, another 25. That is doubtful, but we don't know. But at some point in July, August, something like that, it will stay flat and the Fed will not raise the interest rates anymore, okay? Will this be good for Bitcoin? Well, we can assume that this will actually be good for Bitcoin, because many times when the Fed actually started pausing and did not raise anymore, this was pretty good. And this was the only time here when Bitcoin existed when this happened. It went on a huge bull run in late 2018, early 2019. And the other times, Bitcoin did not exist yet, but the stock market always reacted very positively when the Fed stopped raising the interest rates and the interest rates just remained constant, okay? So there's a high likelihood now that when the Fed stops raising, that we get some kind of rally, right? It might just go up. However, what will happen now when the Fed goes down? And we saw that the market expects the Fed to go down sometime in late 23, early 24. Yes, we cannot know exactly, but sometime in late 23 or early 24. Now, do you think this will be good for crypto? It will probably not be good for crypto, because MC Hammer is not here to save us, okay? He's not here anymore. He's gone. Friends, he's gone. He cannot save us anymore like in 1990. Who is here to save us? Nobody, okay? And this time, like all the other times, like most other times, except this time in 1990, the markets will probably start crashing. To some extent. We don't know if it will be a big crash. Everybody on YouTube these days is drawing a huge arrow that points to zero. Like, oh, biggest crash in the history of the world is awaiting us. Confirmed very soon, 99% crash. You will lose everything. Everything will drop to zero. Biggest crisis ever and stuff like that. Guys, this makes for good clickbait headlines, okay? It makes for good headlines, and YouTubers, they like earning money, so they put out these cool headlines that create a lot of clicks, clickbait. But is it really true that we'll get a huge crash? I mean, we saw the previous crashes, they were kind of brutal, but they were not huge, insane 90% crashes. So yes, there could be a crash, but it is not 100% confirmed. It could be also like a quick correction, and then we continue our trend upwards. We don't know. However, it could indeed happen that as soon as we go down here, that Bitcoin makes a steep correction of some form. And then we have to see how strong will this correction be? How low will the stock market go, right? How low will the stock market go? So if we also put the S&P 500 here into the same chart, and we say, okay, the Fed stops hiking at some point and then goes down. If the S&P continues going on a rampage and then the Fed starts lowering at some point, then it depends, of course, how deep will it go? Will it go back to this level here? Or will it go even deeper to, levels that we haven't seen since 2018 or 2019? This will be super important to know what Bitcoin will do. Bitcoin will probably go on climbing for the next months to some extent. We cannot, of course, know the shorter time frames, but the longer the time frames, the more likely it is that we can make some form of accurate predictions. And then when the interest rates go down again, this will be, of course, also the time when Bitcoin goes down. And if the S&P 500 makes a very big correction, there's a high likelihood that we will go down through this logarithmic channel, really down to values that many people did not think possible. And I am talking really values here that you would not think possible. I'm talking about values like $2,000, $3,000 per Bitcoin. I know this sounds insane. But if the stock market crashes like 2008, or 2000 to 2003, we should really be prepared that Bitcoin can really go down to prices that we cannot imagine. I'm really talking about this area here, let's just delete this stuff. I'm talking about this support level here at around 2,000 to 3,000 here in that area somewhere, okay? I'm talking such prices. It is not impossible to conceive something like this if the stock market brutally crashes. if the stock market sees not a huge correction, because let's keep in mind, friends, this is now becoming common knowledge. Many people now know already about all this stuff, the inverted yield curve that I showed in the last video about the Fed funds rate. This is now becoming common knowledge. And so people are knowing about this. They are mentally preparing for this. The big players, smart money, is preparing for this because it is becoming more common knowledge. And because it is becoming common knowledge, that actually changes the rules of the game. So something that actually normally would happen, something like this, like, okay, we're going on and then the stock market crashes and then everything goes brutally down, which would normally happen, might not happen in that form because everybody's expecting it. So, my current playbook is that something unexpected will happen. I said it last time. I only see two possibilities. I do not see just a repeat of the previous cycles. No, forget it. Let's go into the daily chart. Let's just copy the previous cycles and we say, something like this here will happen. Wow, this will be so nice. We go just continue going on because 4-year cycle, or we just copy this cycle here, right? And then we say, this will be so nice. It looks similar. Yeah, maybe something like this will happen. I think it's very unlikely that something like this will happen because in late 2023 or early 2024, the Fed will start lowering the interest rates, and with a high probability, and we always have to think in probabilities because in this market nothing is 100% certain. With a high probability, the market will start crashing in some form in late 23 or early 24. Everybody's expecting the magical savior, the halving, which will bring us big prices in late 24, early 25. But I think this is another reason why probably it will not be so. Probably this decreases the probability that Bitcoin will make new all-time highs as expected in late 24 or early 25. So for me, the probability is reduced. Okay? So I see only two possibilities, to be honest. I see the possibility that the stock market surprises us and is super resilient because the unemployment numbers are low, the job market is insanely strong in the US, and it just keeps continuing rising, and will just like make an unexpected high already earlier than most people think. I don't know, in late 2023, right? Because this is when the Fed will start lowering the interest rates, possibly, okay? And this will be a good time for like having a huge crash. This would be a good coincidence. And nobody is expecting this, right? Because everybody's like repeating this same old 4-year cycle. Nobody is expecting a rally right now. However, what also nobody's expecting is that we now go to like the $40,000 or $45,000 level, and then we go down to 2,000 or 2,500, stuff like that. That is also something that nobody's expecting. So these two scenarios, as crazy as they seem, are currently my favorite scenarios. And the good thing is that until about 40 or 45,000, the playbook is exactly the same. You see, it's overlapping, However, then it will diverge. And here I can tell you one thing, it's a good time to take profit. That's just my recommendation. Of course, you know that I'm not a financial advisor. But what I'm saying is that here might be a good time to de-risk. If you have a high exposure to the crypto market, here's a good time to de-risk because you don't know if such a scenario will happen or not. You don't. I also don't, right? And we have to be strategic about the market. We have to be strategic. And just because this could happen, you can keep, for example, a third of the portfolio. I for example, might de-risk by 70%. I would sell 70% of my coins, keep the rest. Okay, if that happens, awesome. I still make some nice gains. But if this here happens, I will sure be very, very happy to have sold the larger part of my portfolio. So that is the playbook. And therefore, be careful about all these people saying that it is so nice when the Fed will start lowering the interest rates. Yes, it probably will be nice when they stop, when they pause, but the moment they start actually going down, this was historically always the moment when we would not like to be in the market, when we would have liked to already have sold everything before. That's what I wanted to say for today. I hope you enjoyed this video. I will try, as I said, to upload more frequently. I cannot promise it, because if the market continues to be boring like a crazy bastard here, like it was so boring and so stupidly annoying that it was just keeping to go down. Sorry guys, I just didn't want to make videos in this time. However, the next few months I think will be very interesting. I think actually there's a possibility that this entire year until late fall or early winter, like November, December, will be a very exciting year for the crypto market, because that is probably when the Fed will start lowering the interest rates. So I think this will be a good year with nice action. I foresee a lot of good action in the crypto market. And so I think I will be having fun from time to time doing these videos, okay? I cannot promise you that I will do them daily, but I will certainly do them from time to time, once a week or twice a week or something like that, in the next months, until, of course, the big crash comes, which inevitably it will come. Then let's see how my mood will be. Let's put it like this. Let's see how my mood will be. Friends, that is what I wanted to say. I wish you a nice day. I wish you a great day. Have fun, take care, and see you next time. Ciao!